Good afternoon, everybody. It is 1:40 p.m., the 2nd of September 2009. In about 20 minutes, we're going to get the FOMC meeting minutes of the rate decision by the Fed 2 weeks ago. This is strictly going to be a trading by trying to decipher the meeting minutes. So it's kind of advanced. What we're going to do is we're going to wait for the actual minutes being released, but we're going to be paying attention to the headlines that's going to be passing across the wire, and we'll have to evaluate each of the headlines and see what kind of effect it has on the market. So it will be one of those trades that we'll have to keep one eye on how the market is trading, and the other basically reading off the headline. Now if the headlines are repeat of previous meeting minutes or statements, then apparently they're not going to have strong effect on the market. But if we do get something new that surprises the market, whether it sort of gives an additional boost because the Feds were optimistic about the recovery, or if it shows the true sentiment or the true worries of the Fed that we're just going too fast right now with the recovery, either way, we should see the market react to the headlines. And remember, these statements, the meeting minutes, are being released, and the newswire agencies, they get this copy, and then they have maybe 5 minutes before everybody else to go through them and mark the headlines. And most of the time, the newswire agencies, they are very experienced, and they know, especially the people who are reading these minutes 5 minutes before us, they're experienced and they know what languages were being used before, what are new, so they mark them and they pass it out as soon as it is scheduled to be released. So we trust these headlines, and what we can do is we will wait for the headlines to come out, and we will look at market reaction, and if we do get something that is completely new and surprises the market will react to it immediately, and we'll basically look at to see if there's any momentum really pushing the market. And if we do, then we'll jump in. If we don't see much of a momentum pushing the market, then most probably be wise to stay out of the market. Meeting minutes sometimes will move the market up and down in a whipsaw kind of manner, and after 20 minutes you go back to where you started. So it's important that when we trade news statement, if we decide to jump in, we need to jump in at a very good price level, or else with the whipsaw you could get caught buying at the top and selling at the bottom, and that's the worst kind of trade. This is actually the most difficult type of trade for beginner traders. And you just have to be prepared that you will not necessarily get into a trade no matter what, unless there's something that's very attractive, then you can get in. But always come in with a plan that you're not going to get into a trade, so that you'll remain unbiased, so you won't be just looking at the market jumping and down, the volatility, then you decided to jump in, not really have any reason to back up your movement except for just the excitement of the market. So with that in mind, 15 minutes we're going to get the FOMC minutes. Sometimes we get it a little bit earlier, sometimes we get it a little bit late, sometimes we get it on time. So we'll just start recording just around the release time. Alright, thank you very much.
1 minute to the release of the FOMC minutes.
We're going to be looking for some...
It's taking a little bit lower ahead of the release. That was down 8 points.
We're going to be looking for some reference towards the treasury purchases, which they stated that they're going to delay it or extend the purchase until October. So that was one of the abnormalities.
Should get the FOMC minutes in 15 seconds.
Alright, so that's one of the things we'll be looking for. So stand by.
FOMC minutes discussed trimming the MBS and agency purchase programs. Policymakers saw a slow decline in unemployment rate, considerable uncertainty on recovery strength. Minutes show consumer spending appeared to be leveling, expects recovery to pick up in 2010. Several FOMC members saw a sizable risk of bank credit losses, and most members saw subdued inflation in the next few years. Some members saw a risk of substantial disinflation, and most members saw the economy vulnerable to adverse shocks. FOMC minutes showing that there's evidence that consumer spending was stabilizing. Households are continuing to face tight credit.
Okay, so far we get very little reaction in the market. Not too much of a reaction so far. Seeing a little bit of yen weakness, but not too much of a market reaction so far. Okay, not much reaction for this release. It's pretty much a neutral, but leaning toward cautionary over the future. They're seeing stabilization in the economy, but still being very vulnerable for any kind of adverse effects. So basically a neutral but cautious. So no surprise there. Saw some very little initial reaction in the market. Market is just basically looking at this and not doing much of anything. So it's going to be a no trade based on the release and based on the market reaction. We'll be back tomorrow morning, but as far as this trade is concerned, it is a no trade. Alright everybody, have a good one.